Hi, this is Michael Rony Mullick, and you're watching the Post Market Show. So today, a big fall in all major indices. Nifty falling, having the worst fall actually after almost 7 months. Last time this much fall we witnessed was back in 13th of March, and then today markets falling drastically today. So that was the main situation. But if you look at the selling, I think if you look at the DIIs and FIIs, none of them have net sold. Both of them have actually bought into the market. So who sold? It is actually the retailers. Now, given there's a local holiday tomorrow, the global markets would be open, and no one wanted to carry that risk going on to Wednesday. So that is the overall mindset of the people, that no one wanted to take that risk, and also the festive season going on, and that is why people have sold heavily, and that is the situation. And why what started the selling? It was the US bond yield. After 2007, that was the first time it hit almost 5%, and that led to a panic. But now, as US markets are opened, things are looking better right now. So let's hope US markets over the course of the 2 days trading day, it ends in green, and tomorrow, if it is, the global markets are stable, and on Wednesday we might open with a gap up. So that is the kind of hope everyone is expecting. But let's see to the markets and what has happened today. So if you look at the charts, this is the daily chart of Nifty, a big red candle forming in the daily charts, and Nifty is near a very crucial support level. And you can see the last time it happened was on 13th of March. You can see markets were open around 17,400 levels, and closed around 17,100 levels. So that is way back, and from there markets up more than 2,000 points, and this is the fall that happened today. And more than large caps, but we'll come to that. It was the mid cap and small caps which fell. So yeah, even Bank Nifty, if you look at it, Bank Nifty, we talked about this, a very crucial support at 40. This was a swing level, 43,400 levels. That was broken today, and a massive sell-off has happened. So yeah, if you look at the daily charts, markets, once 43,470 was broken, there was no looking back. Markets kept falling and came very close to 43,000. That is a good support level. Now, Bank Nifty, there is further bearishness ahead. Nifty as well, we talked about this, that 19,500 below a closing will signify further bearishness in the market, and that has happened. Once this level was broken, market started to stabilize around 19,450 levels. Then you see a clear fall happening in Nifty, and especially after 2 o'clock the fall intensified. Today was also the Fin Nifty expiry, so let's look at that as well. Fin Nifty ending almost 1% in the red, and the massive fall around after 2 o'clock. Fin Nifty fell by almost around 1%. So that was the massive fall happening in Fin Nifty as well. Expiry day, buyers probably who caught the fall must have made fantastic money, but it was a very quick fall, and it was an intense fall as well. So that is the situation right now. Let's look at the mid caps and small caps, and this was where people have lost huge amount of money. Mid caps falling by 2.66%. You can see a massive fall happening in mid caps. We kept on referencing this 13th of September low that was broken today with heavy volumes, and that is what is the problem going ahead. And again, you must see that mid caps had continuously moved up since when was this? Yeah, since March end, and you can see this is the first time it is showing a proper retracement. And if you draw this pattern over here, if you draw a box, let's draw one of that. Yeah, a rectangle. So this was the zone. It was consolidating, and this zone has been broken, and yeah, it could be a further fall from here. It could be a start of a downtrend as well. So let's see what lies ahead. Small caps even worse. The fall is 3.79%, but this 13th of September low is still intact, so that there is some hope. But let's see what happens over there. Overall 3.79% down mid caps. So that is what has caused the major panic. Sector wise, nothing to see. Every sector has ended deep in the red, and it was media which fell the highest, 4.98, by almost 5% down as a sector as a whole. Even PSU banks not showing any signs of strength after hitting all-time high. keeps on coming down and down. Today 3.77 percentage down, and in fact today all sectors have ended more than 1 percentage in the red, excepting for FMCG, which is down 0.78 percentage. Rest everything is down. You talk about IT down almost 2 percentage. PSU banks, we talked about it, 3.7 percentage down. Private banks 1.4 percentage down. Auto 1.33 percentage down. Metals down 3.26%. So everything is down. There's nothing specific to talk about. Even index movers, everything is in deep red excepting for Bajaj Finance and M&M. Both of them are slightly up, but it was all the heavyweights like HDFC Bank, Reliance Industries, TCS, Infosys, L&T, Axis Bank, all heavyweights have fell and have dragged Nifty down significantly. If you look at the FII, DII buying and selling figures, this is where this is interesting. So I told you, institutional level, there was no selling whatsoever. 1,111 crores buying from DIIs, and FIIs have also net bought for 252 crores. So net institutional figure remains positive because both of them has bought, and that is why I think the VIX hasn't spiked at all today, because during these situations it is the VIX which spikes like crazy, and you see VIX shooting up 10-15 percentage, but none of that has happened today. What has happened is VIX just up just by 0.8 percentage, nothing much at all. So yeah, that is still it's 10.9. I think this is the reason people might not panic, because such a big fall, the VIX should have risen significantly, and that did not happen. So maybe there is still hope for the markets to recover from these levels. And yeah, so now let's look into the US markets and see what is happening. US markets are right now trading in the green. S&P 500 0.3 percentage in the green. Nasdaq looking good, 0.92 percentage in the green, and Dow Jones is just flat. It has recovered its entire fall. It opened with a gap down, but now it is up. So let's looking fine, I would say, for the time being. And even with US markets recovered, even the European markets are slightly in the green as of now. UK markets, French markets, and German markets are all positive, but very, very slightly. And Asian markets are in the red, but not as much as the Indian markets. Hong Kong markets 0.7 percentage down. Japanese market 0.8 percentage down. Hong Kong markets, so South Korean markets down by 0.7 percentage, and Chinese markets down by it's absolutely flat. So that is the situation in the global scenario. So things looking not that bad, I would say, in the global markets. So maybe tomorrow markets, it's holiday, so if the market moves up, global markets move up, I mean, things could be better on when things open on Wednesday for our markets. Crude oil prices coming down, that is also a good sign. 2.46 percentage down crude oil. And yes, talking about US markets, US VIX is down more than 8.3 percentage, so that is also good. And talking about gold is stable around 1978. Nothing much has happened over there. Copper is up 0.86 percentage, and rest metals are, yeah, they're not moving anywhere as such. DXY moves down, so that is also a positive sign. Equity markets might not have so much weakness going ahead. And Indian rupee has appreciated against US dollars today by 0.1 percentage, and against euro and pound, things haven't been that great. Indian rupee has depreciated against euro by 0.4 percentage, against the pound sterling by 0.45 percentage. So that is the overall situation. But since US dollars against US dollar, it hasn't depreciated. In fact, it has appreciated. That is something good for our markets. Looking at open interest, is nothing to see as such. You know that after such a massive fall, people would have closed their eyes and sold call options, and that is exactly the case today. Nifty's monthly expiry 26th of October. Put call ratio looks absolutely, it's a call heavy market. 0.58 was the put call ratio, with the massive amounts of call writing happening from right from 19,300 and above, with 19,400 and 500 adding massive amounts of call options, and lot of put unwinding has also happened in the market. So now 19,000 is the level where we have the highest amount of put options, and 19,500 is where we have the highest amount of call options. So it says pretty it's absolutely bearish markets in Nifty today. Back Nifty, looking at the monthly expiry, this time on Thursday, Nifty and Back Nifty, both of them are expiring instead of the Back Nifty expiry happening on Wednesday, because the weekly contracts were the ones to change. So slowly from next month onwards, we will have Back Nifty expiring on Wednesday as usual. So yeah, keep that in mind. So 26th October, Back Nifty expiry as well. Put call ratio is even terrible here. 0.48 is the put call ratio. That means massive amounts of call writing, right from 43,200 and above. You can imagine. Even some people have sold calls in the money as well from 43,000 and above. So yeah, it's a huge call build up in the market, with some little amounts of put at 43,000 and then at 42,000 levels. So people are absolutely bearish in Back Nifty, and yeah, let's see where it goes. And again, since the markets are so much calls of written, in case there is a recovery on Wednesday, these can people can fall in trouble, and again there could be an opposite thing happening on Wednesday as well. So that is going to be interesting. So right now, Gift Nifty indicating 19,340, so it's slightly up from where it has closed today. You can say around 30-40 points up for the time being, but yeah, there's a holiday tomorrow, so let's see how the markets how the global markets react tomorrow. So that's going to be setting the tone for Wednesday. Coming to the levels, 19,233 is the last level for Nifty. Once that is broken, the next support is way back at 19,000 levels. So that is, let's see. October month has been a bullish month, but let's hope there is still time. I think, yeah, 2 more trading sessions, but can we have a recovery till 19,500? Let's see what's in store for us. So, the resistance levels, 19,334, 447, 523, 566. So those are there. And Back Nifty, the crucial support is at 43,000, and below that, I'm looking at a fall till 41,800 levels. That is where a good support is. So things can look pretty bearish it's actually starting to look pretty bearish in Back Nifty. So keep an eye out for that. And yeah, upside they have 43,470 and 43,740 as a resistance levels. So these are the current situation. Let's see how things turn around. Tomorrow is a market holiday, so keep that in mind. And that is all from my side. Thank you for watching, and have a very good night.